Hi everyone, this is Jason Burek of Wall Street from E Street. Welcome back to another Wall Street from E Street podcast interview. Today's special guest is a returning guest. He's the former chief of staff for Congressman Ron Paul. He's also the president of the Ludwig von Mises Institute. I love that. I love their YouTube channel. I love reading their articles. Jeff Deist, thank you for joining me again.
Hey, thank you, Jason. It's good to talk.
Now, Jeff, I want to ask you about President Trump, since we had you on just, I believe, a month or so after he got his inauguration last year. So okay. What's your opinion then of President Trump's first year in office?
Well, it's obviously very strange. All the personality and Twittering and all that stuff aside, just looking at it from an ideological or I don't like this word, but a policy perspective, very, very mixed bag. It's interesting that we're talking about guns and we're talking about shootings and we're talking about all kinds of things. But I don't know if you've seen the projected budget deficits over the next couple of years are going back up to at least 500 million a year. 500 billion a year, and projected to maybe go back up to $1 trillion a year, which we haven't seen since about the middle of the Obama administration. So we're not talking about the crucial issue of U.S. debt. We're also not much talking about the Fed. The new Fed chair, Jerome Powell, is viewed to be just like Janet Yellen. Trump liked him enough to nominate him, I guess, as a safe pick, somebody who would continue Yellen's policies. That's not a good thing from our perspective by any stretch. And he's had a rough go, but he had, I think, 1,000-point loss in the Dow on his second day on the job. So we're starting to see some cracks in the equity markets. We're starting to see some cracks in the overheated housing markets on the coast. So there's nothing Trump can do about that particularly. Those kind of issues and problems are baked into the U.S. fiscal cake and the monetary policy cake. But he could. The one thing he could do is not make them worse. And on that score, I think he is, headed in the wrong direction. But look, he campaigned as a trade restrictionist and a populist. He didn't particularly campaign on slashing taxes, although his proposal cuts them marginally for some people. He never claimed to be a big free trade guy or a big personal liberty guy or an anti-Fed guy. So I suppose I'm not surprised by his first year, but I think we're still talking about some of the wrong things. We ought to be talking about the Fed. We ought to be talking about war and peace, and we ought to be talking about state power. And instead, he's very, very good at putting everybody, especially the media, off on tangents and wild goose chases.
Yeah, he has done a few good things. I don't know if you've noticed this, but the phrase deep state is now mentioned many times a day all over the place, when only in the past, for many years, it seemed only Ron Paul would mention it. And then people would, not talk about it, not want to talk about it, call Ron Paul a conspiracy theorist. And now it's routinely talked about by basically both parties on Twitter, and it's talked about all the time on Fox News, and even on some of the regular mainstream media channels that are hardcore Democrat. So there are some things that Trump's doing good, but from an economic perspective, I would agree with you. These tax cuts, I love private sector tax cuts, but like you said, there's no corresponding cuts in federal government spending. So those deficits, I think you're being conservative with your estimates for the budget deficits. I think we're looking at $1 trillion budget deficits. And did you see that Trump mentioned an increase in military spending? So in the last couple weeks, he was saying initially $300 billion increase in military spending only weeks ago, but in in the last couple days, he's now mentioned the new number of $700 billion.
Yeah, it's really amazing when you think about it. Pretty soon, the entire U.S. debt is going to be consumed just by Medicare, Social Security, Medicaid, and military at this rate. So it's disheartening. This is one area where the president can unilaterally do a lot, and that is simply don't intensify or escalate any of our current conflicts, don't start any new ones, and not even with some sort of radical troop withdrawal or some sort of new radical foreign policy, just slowly start to ratchet down some of the military conflicts we're involved in. Do that on the foreign policy side, then just do a little bit of work on taxes and regulatory relief on the domestic side. And look, the U.S. economy would just walk away from the rest of the world. But unfortunately, I think he's gotten away from some of his instincts, which are to do things that are good for America, to make deals in his view I think neoconservatives have gotten involved in his foreign policy apparatus, and I think he realizes that the one place he can receive praise from the media that hates his guts is when he bombs somebody. Then they say he's acting presidential. So, this is a guy with an ego, and on some level, he wants to be loved, even if he, seems to pick a fight with the media every day. So it's a bad combination. And of all the things he shouldn't be expanding, it's our military spending and our military involvement overseas.
Yeah, and he said he was going to cut a lot of federal government spending, and there hasn't been any meaningful cuts in a lot of government agencies. There's been some, and there's been some reduction in regulations. And obviously, President Trump has done things that candidate Trump said he wouldn't do. And, he had that rhetoric that a lot of libertarians would have agreed with about the Federal Reserve and Janet Yellen and interest rates, that they were creating one big fat bubble. But has he actually done anything that you've liked so far? He has appointed some judges that are pro-Constitution. Now, we'll see if they actually stick to the Constitution, but some of the judges he's been putting into the American court system and on the Supreme Court are claiming to stick to the Constitution. So we'll see if that actually happens. But at least that's better than what the Democrats have done.
Well, the main thing he's done, and I'm not sure he did this, but rather he's a symptom of this, is that he's changed the conversation. He's allowed people to push back on some narratives that I think are phony. In the media, and he's allowed people to discuss things more openly. So I think that there was this idea that neoliberal social democracy and globalism under the Hillary Clinton type model was the inevitable future for the West, and that there was an arc to history, and the Trump's greatest gift is upending that and coming out of nowhere, surprising the hell out of media, surprising the hell out of elites, and throwing that asunder. Now, that in and of itself doesn't create liberty, but it gives us an opportunity to change the conversation from this inevitable progressive globalism. So I think that's important. And as you mentioned, he talks about the deep state. That's a bit of a misnomer because it's hiding in plain sight. The deep state is just another word for the administrative agencies. And they grew wildly out of proportion to their constitutional role in the 20th century. That's part of the imperial executive. And what they become are mini governments unto themselves. It's very difficult for the average person to sue a regulatory agency like the IRS or the SEC if it messes with them. And frankly, it's even difficult for Congress to sue the administrative agencies if they don't do what Congress tells them to do in a statute, for example. So they're the real government. And 90+% of administrative agency employees don't come and go with the current president. And a huge percentage of them are also federal union members. So they have all kinds of protections against being fired or laid off or having their pay cut. So this is the real government. And what I don't like about the term deep state is it implies that it's hidden or that there's some conspiracy, when in fact it's right in front of our noses. It's all the alphabet soup of departments and agencies that make up what we call the federal government, and they matter far, far more than who's president. They matter more than the Supreme Court. They matter way more than who you send to Congress. They're the real government, and I'm not sure Americans get this, and to the extent we're talking about it, that's a great thing.
I completely agree. And that's a great point you made about the bureaucracy here that a lot of Americans still don't understand. I think they're starting to wake up and understand it now with all the corruption and the evidence we're seeing coming out about the abuses of FISA and the corruption and the ineptitude with the school shootings in the Department of Justice and the FBI. But Jeff, you've lived in Washington, D.C. area for a long time, and I've lived here since the year 2000, and there's tons of government bureaucrats here that are very hardcore Democrats. Some of them, don't even like capitalism, but they have very expensive tastes, like BMWs and Mercedes, and they like traveling and spending a lot of money, but they hate capitalism. They make over $100,000, and some of them, even if they commit felonies, they can't be fired. So if they have, Republican presidents or Republican majority Congress, they just wait them out, or they can just ignore some of the laws that are passed. They choose whether or not what gets enforced. And we've seen this now with evidence of what was supposed to get done with the laws with the DOJ and the FBI, and they either for political bias or stupidity or laziness or corruption or whatever other reason, they just chose not to properly enforce their procedures and their laws.
Yeah, well, when administrative agencies including law enforcement agencies like the FBI, screw up, their budget doesn't get cut. Their budget gets increased. So it's a very perverse system. The private sector ought to be doing and could be doing virtually everything that the federal government purports to do. They could do it better and cheaper. And what people forget is that it's not just the taxes that we send to Washington, it's how much of those taxes are consumed by the bureaucracy itself in salaries. We assume that the $4 trillion roughly, $3.5 trillion that the federal government takes in taxes, that then goes out in the form of government spending on actual programs or actual weapons or things. We forget that the vast majority of that money actually just goes to fund the bureaucracy itself. So it's really, really a serious problem, and it's one that's going to be hard to address with the current makeup of Congress, with the current two-party duopoly, really a uniparty now. So we're going to need some radical different thinking if we're going to get out of the hole that the federal government keeps digging.
Yeah, I completely agree. And unfortunately, the way GDP is calculated right now is that federal government spending, if it's increased, is counted as positive towards the economy. And and what did Rothbard say about GDP for our listeners who are not familiar?
Well, Rothbard came up with an idea of gross output, and what's so interesting about GDP is not only does it include government spending, which is a farce. Yeah, we could just have a gigantic war and crank up the defense contractors and it increase GDP. It also nets out exports with imports. So it creates this fetish for exports over imports, which makes no sense if you understand Mises' conception of consumer sovereignty. So it's GDP is a mess, and it's not something that libertarians ought to be looking for to judge the health of an economy. India's got a high GDP, but even on a per capita basis, GDP is really, really misleading.
Yeah, I agree. And I think GDP governments just use it as an excuse to trick the bond market so they can keep borrowing at cheaper rates. So you have China, the U.S., all these large economies and countries having fake GDP numbers, not counting a real inflation rate, counting government spending as positive when it should be subtracted from GDP, as Rothbard says. And that allows them to continue to get away with the bad behavior that they've been getting away with.
Well, I like Hans Hermann Hoppe. When we think of the economy in terms of goods, the economy produces goods. Well, Hoppe says government produces bads. In other words, all kinds of negative externalities that come from the state, not just sucking up a lot of the money from the legitimate private economy, but not only does it take the money out of the economy and stick it into servicing all the salaries of our administrative state, but it does things that are bad. It regulates, it adventures into military forays. It taxes us. It creates bad incentives. So I love that term, bads, but that's what government produces.
It picks and chooses winners and losers, too, with all the regulatory hurdles. I mean, look at all the different government agencies. They basically cartelize so many of the different industries, whether it's the Federal Reserve and banking or the FDA, how Big Pharma can easily control that and kill tiny little competitor drugs and steal the intellectual property for free. So, I mean, so many of the different industries, Jeff, are now incredibly overregulated, incredibly overtaxed, and there's not a lot of real competition in a lot of the industries because the government regulatory agencies have made it so the little guy can't really compete.
Well, Jason, it would be comical if it weren't so disastrous, I suppose. But here we are. So hopefully people are starting to understand what's going on, and hopefully just the rise of the internet and social media and alternatives to the mainstream legacy media are giving people an opportunity to talk about this and think about this stuff before what I fear is some sort of cataclysmic event, a significant devaluation of the dollar, for example, a big stock market equities collapse worse than 2008, and imagine what the Fed or what the Treasury might do in terms of bailouts next time, a significant banking crisis with imagine a big bank like B of A or Wells Fargo being exposed as insolvent. There's a lot of different ways that something ugly could unfold, or just simply a new war. We shouldn't forget that. So these things are out there, and they're all well within the ability of our government, which is like a big drunk, thrashing around. So it's good that we're talking about this stuff. It's good that we're using our freedom to talk about this stuff. The question that we have to consider is, are we reaching enough people, and are we doing it fast enough?
Well, to add to your points there, Rothbard, in one of his books, I think it was talking about the free banking era, and he was explaining about fractional reserve banking. I mean, fractional reserve banking is inherently unstable, and he basically said that all banks that use fractional reserve banking, depending upon their reserve ratios and how much capital they have, how well capitalized they have, I mean, they're all different degrees of insolvency. So, I mean, the banks are basically already insolvent. It's just they're allowed to use phony accounting that says that they're not insolvent.
Well, and especially after the '08 crisis, when there was a lot of really toxic mortgage debt out there that had been bundled together in various derivative packages. If those mortgages, those underperforming or non-performing mortgages, had ever been marked to market and assigned their true value on the balance sheets of big banks like B of A, which was forced to buy Countrywide during that period of crisis, the whole world would have seen that big Western institutions that we think of as so stable were actually zombie banks. But look, we saw Lehman Brothers as an awfully stable gold sterling name for a long time, since the Civil War all the way until 2008. So things can change pretty rapidly, and the banking system is really the soft underbelly of life in the United States. Is something we rely on to the nth degree, but it's actually very, very fragile.
Good point. And Lehman Brothers just got too greedy. I mean, they were expecting a bailout, and then they weren't. They were the sacrificial lamb instead. They were expecting to be bailed out, and then they didn't get the bailout like they were hoping for. But let's transition, Jeff, now to another question. So recently, one of Trump's main economic advisors, this guy named Kevin Hassett, gave a press conference saying that Trump's administration was using a lot of supply-side economic stimulus and that it would be deflationary and counteract inflation. What are your thoughts about what this guy said? It didn't make any sense to me. I disagreed with what he said because it sounded like he wanted to ramp up the government spending even further and justify, these $1 trillion or more annual government budget deficits, and that would be deflationary?
Yeah, it's interesting. A lot of people, let's just be honest, most people perhaps don't really think of inflation as a monetary phenomenon. They think of it purely in terms of prices, and CPI and other measures are jiggered in a way that, in my opinion, they don't show, or they don't accurately or truly measure inflation. So for most people who are outside of either Austrian or monetarist schools of thought, inflation is not per se a monetary phenomenon. So there's that for starters. But look, the idea that we need to stimulate, either on the production side, we need to stimulate supply, or we need to stimulate on the demand side, which is very broadly speaking a Keynesian notion that you use either fiscal or monetary policy to encourage spending and consumption, and that's how you grow the economy. I think both of those are flawed. The supply and demand ought to be in sort of a dance with one another, and all we need to think about it is it actually precedes Austrian economics. We can just apply Say's law and say that the ability of consumers to purchase things because they have enough wealth in a productive economy is also based on their ability to provide things, to produce things. So the real issue in any economy is how productive it is on a per capita basis. And you can't gin up, you can't create false prosperity by using monetary or fiscal policy either to on the supply side or on the demand side. I think that either attempt creates an artificial sense of well-being and an artificial sense of growth, which is then artificially measured by GDP. And monkeying with things, creating artificialities, is exactly what creates an unholy business cycle. It's exactly what creates malinvestment. Certain projects begin to look good on paper that wouldn't look good necessarily on paper if the government or the central bank wasn't interfering in the marketplace. And so you get this cycle that Mises and others properly identified, in my opinion, known as Austrian business cycle. And here we are again. And it's terrifying to me to think that the world is much more leveraged than it was in 2008. Both personal, household, business debt, all are higher than they were in 2008. And the derivatives market is bigger than it was in 2008. So look, if this is what Trump guys meant, if all that goes up in smoke, hell yes, that's deflationary. If a bunch of
are they going to allow it though? Yeah, are they going to allow
bad debt and over-leveraged people shrink their balance sheet? Yeah, I'll be the first to admit that's deflationary in effect. But that's hardly a heartening thing. And I think supply side concepts are wrong. I don't think that works. I think we've shown that it doesn't work, and that what we know works is to get the government out of the way and just take its thumb off the scale.
I think what most people don't understand about supply-side economics is, like you mentioned in more detail, that it's basically still central planning. It's not Keynesian aggregate demand stimulus, but it's trying to still go into the market and actively tinker and intervene. So, and they're doing that with monetary policy. And the reason it may have, and I'm using air quotes, worked under Ronald Reagan was because the debt was not that big, and the U.S. at the levels it is now. I mean, it's orders of magnitude larger now, the government federal budget deficits and also the total national debt. And also, back then the U.S. was still a creditor nation. So the U.S. could get away with more back then. But, now the amount, if interest rates went up a couple percentage points, the U.S., a lot of their a lot of the U.S.'s tax revenues would go towards interest payments on the national debt. So the U.S. federal government can't really afford to pay a much higher interest rate.
No, if interest rates were at their historical norms in the 5 to 10% range, interest service on the national debt would quickly rise to $1 trillion. It could very easily. It's not impossible to imagine it becoming the single biggest annual budget item for Congress. So
I think it's like $100 billion or a little over $100 billion right.
Well, actually, it's been over $300 billion in fiscal 2017, which actually the federal calendar year runs October to October. So this year it may be well over $400 billion. So it's rising rapidly, and that's something where the new Fed chair is between a rock and a hard place. The whole world knows that the U.S. federal government's never going to get its fiscal house in order. Everybody knows that. We're never going to pay off the debt, quote unquote, in any meaningful, real fashion. But the question then becomes, how do you maintain interest in having people buy our treasury offerings without raising rates too high? If this was a rational world and investors were looking at the U.S. government with the same a degree of skepticism that they look at any company that they might buy either equity or corporate debt from, they'd be looking at our country's balance sheet and its fiscal habits and saying, "Wow, I want junk bond rates for these guys." But there's a lot of reasons that the U.S. government debt and the U.S. dollar are still viewed as the least dirty shirt in the laundry. So we've kept it together this long. I wouldn't want to be Janet Yellen's successor. That's all I can say. I think the guy has an impossible job.
Yeah, I agree. And that high interest payment on the U.S.'s national debt, which is growing, like you said, that's with the Federal Reserve and other central bankers coordinating and working together to artificially manipulate interest rates lower and lower and lower. And we have Keynesian academics and even crazy central bankers talking about negative interest rates. So the Federal Reserve is, going to at least right now, the plan is for people at the Federal Reserve, including the new Fed Chairman Jerome J. Powell, to increase interest rates maybe a couple more quarters of a point. But there's going to be another financial crisis in the near future, and we'll see if they continue to raise interest rates then. Or if they raise interest rates, Jeff, something could break. So I don't think they're going to be able to – things are going to go magically for the Fed where they're going to be able to continue to raise interest rates without something breaking or asset prices crashing or something along those lines. I don't – because, I mean, look at the Fed's track record, right? I mean, has the Fed gotten anything right in the last 10 or 15 years?
No, really since 2000, the tech stock bubble and crash of 2000, 2001, which is when Greenspan really decided to go into hyperdrive. Since then, we've been in an experiment. And we've been living through an experiment in radical monetary policy. And that experiment might take 30 or 40 or 50 or 100 years to unfold. But nothing good comes of expanding even the monetary base, much less the money supply. You don't creating more money, even if it's just base money held in as bank reserves among commercial banks, doesn't create any new wealth. It doesn't magically conjure up new goods and services into the economy or make companies magically more productive or magically open up new markets. It just doesn't. It's a form of financial engineering, and which I certainly believe always has a bad repercussion down the road. So that's where we are, and we're going to find out if what they've done since 2008 creates something really, really unpleasant.
And I would say that money that's created, maybe some of it has stayed as reserves docked at the Fed, earning interest rates. But that money has also led to asset prices in the everything bubble for all these different asset prices for stocks, bonds, real estate all over the globe going totally haywire in terms of its valuation. So, all this central bank intervention, Jeff, in my opinion, it's exacerbated the wealth gap. And unfortunately, a lot of people out there who don't understand real economics, they're not blaming the central bankers who deserve the overwhelming majority of the blame for all this, even before the 2008 financial crisis, and now it's even worse after the 2008 financial crisis 10 years later, basically. They're blaming, a lot of people, unfortunately, are blaming capitalism and free markets for this, which is, it's not right. I mean, I get in arguments with people about this, but, a lot of people don't want to hear the truth.
Well, when people on the left, when progressives talk about undeserving rich, there's some truth to that. That happens to be correct. There are an awful lot of people who have gotten wealthy, far wealthier than they would have otherwise at the Fed trough because of their close proximity to newly created money in the banking system. And progressives talk about this. There's a great author, a friend of mine named Nomi Prins, Prins. She's written several incredible historical books about the U.S. Fed. She worked at Goldman Sachs, and there's a lot about central banking generally. And, this is a great horseshoe issue for libertarians and progressives to get together and say, look, this money machine, this beast it's enriching some people, but it's not enriching everybody. And it's forcing little old ladies who ought to be in a very safe investment posture towards the end of their lives. 30, 40 years ago, they'd have been making 8% off really simple, safe savings accounts. Now their CD pays 1.5%, so they have to go out and chase yields and take investment risks that they wouldn't in any kind of rational interest rate environment. So it's a great wedge or dovetail issue for your progressive friends, and it's the kind of thing where Nomi Prins and I can get together and find a lot of areas of agreement.
Yeah, I'm friends with Nomi too. I've interviewed her a bunch of times on my channel, and I had dinner with her in September.
We'll be right back with Jeff Deist after a word from our sponsor.
Do you work out routinely and eat healthy almost all the time? If you eat paleo or vegan or work out routinely, you may be eligible to save up to 33% off on your life insurance thanks to Health IQ. Health IQ is a venture capital-backed, big data technology life insurance company that offers customers life insurance at special rates by using the latest technologies. For more information, please go to healthiq.com/WS4MS. That's healthiq.com/WS4MS. I want to ask you from a historical perspective, since I know you've read a lot of Austrian School Economics, and we do tend to study history more than a lot of the other economic schools. So what other time periods in financial history does this remind you of right now? Does this remind you basically of the roaring 1920s, a couple years before that October 1929 crash?
Well, I've read more about the 1800s reading Rothbard. Jim Grant has a great book about the 1919, why the crash didn't happen then. I don't know if it reminds me of the 20s, but I would say the only parallels we have, and I'm not even talking about the stock market, I'm talking about the dollar. The only parallels we have with currency crises are with a particular currency that was relegated to a particular region, like the Deutschmark in Weimar Germany, or more recently in Argentina in the late 1990s. So we've seen what currency crises look like when they're contained to a particular country in a particular time. What we've never seen is what would happen if the U.S. dollar gets a cold, the whole world gets the sniffles, because the whole world uses dollars. Now, most of the whole world uses dollars to balance international payments and also to buy oil, at least from OPEC producing countries. So it's really unprecedented, and just the scope of it, the amount of debt, the fact that unlike in the 1930s, very, very few Americans actually produced their own food or self-contained in working in agriculture when people were just tougher. They were hardier. They could survive more hardship. Today, we're very, very soft. We're very, very used to material comfort and cheap and easy credit. So I don't know. I wish I had a better answer to the question, but that's what's so frightening to me is that not only do we not really necessarily understand the size and the scope of the problem, but that as people, we're so much softer than previous generations that endured things like the Great Depression, that endured a couple of world wars, that endured the Civil War. We're nothing like those people. Let's be honest with ourselves. I mean, there would be a collective psychotic breakdown in this country if Facebook went away for 48 hours, much less ATMs and gas stations didn't work and grocery stores were empty. I mean, we can just look to Venezuela to see what that might look like. So, Jason, I like to be an optimist, and I am a long-term optimist, but somewhere in the short term, there's got to be a correction, and we have to tear the Band-Aid off and build a new economy on a new foundation of actual productivity and sounder money. How we get from A to B, I'm open to suggestions because I don't have an easy answer.
The reason I bring up the 1920s is because there was a property bubble back then in Florida. So somewhat similar to now, how there's real estate bubbles all over the globe. There was record amounts of stocks bought on margin back then before the October 1929 crash. So I think almost like 20% of all the stocks on the New York Stock Exchange were all bought on margin. So a lot of people put no money down. And for the professional money managers and hedge fund guys and day traders, there's an enormous amount, basically a parabolic graph for amount of stocks on margin right now, about $800 billion worth of margin to buy stocks right now. So enormous amounts there. The other thing is, yes, the U.S. was on a gold standard back then, but prior to the October 29 crash, because all the rest of the economies all over the globe were not doing well then. And so the U.S. was, like you said earlier in the interview, the best house in a bad neighborhood. So there was tons and tons of capital coming into U.S. markets, into the stock market and other parts of the U.S. for investment, looking for a safe haven. And that's basically what's been happening for a while now, how like a lot of money has come into the U.S. in real estate, in the real estate market, in the U.S. bond market, and in stocks. So that would be the similarities, the parallels. Obviously, there's differences, but I think there's also a lot of similarities as well.
Yeah, and that's why the dollar stays where it is. The rest of the world is screwed up too. If you look at what other big central banks have done, the ECB, Bank of Japan, the Chinese central bank, in the last 2 decades, it's been as bad or worse than us. So, this is still a very strong country, very strong. We have tons of natural resources, oil, natural gas, shale. We have lots and lots of timber. We have millions of acres of arable farmland. We can produce enough food for ourselves and export plenty of it. We still have, despite all of our problems, we still have universities that are sought out by the rest of the world. I would say our K through 12 is a disaster. Universities are still good. We still have a relatively educated workforce. So there's a lot of things still going for America on paper. So that's what we ought to remind ourselves of as liberty-minded people. That don't succumb to gloom and doom. Human beings fight their way through the cracks. There's a natural propensity of human beings to try to improve themselves materially. So that doesn't just go away. No matter what the government does.
Excellent points. And the U.S. also has a lot of great entrepreneurs. And so the entrepreneurs are American born here, and they've read a lot of books, and they worked at companies and went and started their own business. And we also attract a lot of entrepreneurs from other countries where it's tougher to start a business, or there's gangs or even more corrupt governments than the U.S. So there are still a lot of entrepreneurs here in the U.S. and I think that's offset some of the inflation that's occurred in a lot of different industries. So that might be one of the reasons why the U.S. hasn't had hyperinflation yet. So let's transition then to some of this entrepreneurship. So what do you think the great Austrian School economists like von Mises and Rothbard would say about Bitcoin and other cryptocurrency?
Well, I think they'd applaud it. The number one goal for money, in Mises's view, apart from its physical or natural characteristics as a store of value and a wide medium of exchange, was to depoliticize it, to take money outside of the influence in the realm of governments or central banks. When Mises was first writing the U.S. his book, The Theory of Money and Credit, came out just a couple of years before the U.S. Fed was created. So he sort of straddled the era of the Fed in his own writings. But depoliticizing money, taking it away from political control, where there's always going to be political pressure to inflate the money supply if money's controlled politically or through a political central bank, because it's always easier to inflate than it is to tax directly. Inflation doesn't spread across the economy evenly. Sometimes there's a time lag in how it's felt. So our number one goal is to separate money and state. I don't think there's anything more important from a libertarian perspective, and it would have a lot of residual benefits when it comes to foreign policy, when it comes to the regulatory state, when it comes to taxes. I mean, every aspect of our economy and our politics would benefit from taking money away from government. And we don't have to have a radical plan to do so. We don't need to end the Fed. We don't need to get rid of the Fed. We just need to allow competition in the meantime and let people decide whether gold or silver or Bitcoin or another crypto or the old U.S. dollar is the way to go. And maybe for a while they choose among those. But cryptos are very, very interesting in the sense that they're the first attempt, really, in the modern period since World War I, to allow for private money once again. And in that sense, they're noble, they're brave, they're sorely needed. How they're all going to shake out, we don't know, and that's why. Certainly, I and the Mises Institute have always been, watching Bitcoin, but we've never told people, oh yeah, you got to get into Bitcoin. People can lose their shirts. Who knows? That's for the market to decide. That's not for us to decide. Whether Bitcoin is money, that's an empirical question for the market to decide. No single person declares or decrees that. So that's what's so beautiful for it. I'm all over monitoring all the cryptos every day in my own life. So I'm very engaged. But I also keep my big mouth shut when I'm talking to other people because I'm not smart enough to know where cryptos are headed, and neither is anybody else. We don't know. So, it's a fascinating time. Look at the upside. It's a fascinating time to be alive.
And it's easier said than done to get government out of the money business. I mean, anytime the market votes on something that's useful as money, the governments have always tried to hijack it with force, whatever weapon is popular at the time, and legal tender laws. So, I'm in favor of what F.A. Hayek and Ron Paul said for competing currencies, let the market decide. Governments didn't initially start gold and silver as money. It was the market. It was people voted with their own, voted through transactions and choosing that gold and silver were the best forms of money at the time. And it was governments then that hijacked it and figured out ways to cheat gold standards and cheat silver standards and cheat on the bimetallic standards. And with clipping coins and, all the other things that they've done in the past and lie about how much gold reserves they have. So what worries me, I think Bitcoin has been a great experiment and cryptocurrency has been a great experiment so far. For 8 years. It's been successful, relatively successful at least so far. But what worries me is that they can take this technology now behind Bitcoin, blockchain technology, and then use it for nefarious purposes, as governments have tried to do with pretty much many different technologies throughout history, and try to use it for nefarious purposes for, cashless society, negative interest rates, higher taxes on us. So there would be there would be no way for us to protest this if they banned cash, forced everyone into their government-backed digital cryptocurrency, and then they could, if we spoke out like Julian Assange or Snowden, they could shut down our bank accounts or credit cards really quickly. Or if the Congress decided they passed, on a Friday or during a holiday, like how the Federal Reserve Act got passed, they could sneak in a couple new taxes and bam, an extra 10% of our salary is taken off the top. So that's what worries me about the technology behind Bitcoin. But I do want to see more competition. I'm just worried that governments will find out a nefarious way to use it.
Well, they always do, but that's just it. There's always black markets. And if government money gets bad enough, the black market for other kinds of currencies will grow. So they're always playing whack-a-mole. Human freedom is always cropping up in inconvenient ways for the state, and they're always trying to tamp it down. But Nassim Taleb makes an interesting point about Bitcoin. He says, even if Bitcoin fails, we now have the model. We now know how a cryptocurrency could be created. Now, it's true that government has the model too, but I'm not so sure that the genie is that easily put back in the bottle. And one thing we have that helps us fight back against the state is that the state is usually kind of slow. The state is usually kind of slow on the uptake. So in other words, people create new technologies faster than Congress can figure out what they are and how to regulate them.
Yes.
What I would suspect would come next with cryptos, if they continue to grow in use and in value, that the IRS would come along and just like it forced Swiss banks to turn over foreign bank account information, it would force platforms like Coinbase to turn over user information. So that's the kind of thing that we have to worry about. There's no question, but I'm still encouraged. I'm encouraged because the very concept of private money being used outside of any state or central bank, it really, really disrupts the normie thinking. And I think it's probably opened a lot of people's eyes. And it's probably been a great gateway drug for people to become libertarians. In other words, they got interested in cryptos, and through that, they started to learn more about freedom in other realms of life beyond money. So it's exciting to me.
Yeah, I agree. And they can question what money is then. So if they buy cryptos and then they start to question, well, why is the government issuing, doing quantitative easing programs and doing bailouts for friends and picking winners and losers? And what's the difference between my cryptocurrency and the government issued fiat currency? So let's transition now. This is a popular subject among some of my hedge fund manager friends who are also libertarian Austrian School. So a lot of modern day Austrian School economists and followers of the Austrian School predicted basically immediate hyperinflation after the Federal Reserve and other large central banks intervened in 2008 and 2009 with massive bailouts and QE. What do you think they got wrong? Why wasn't there hyperinflation then? So quickly after the QE programs?
I mean, QE took time. It's actually just, official tapering has only begun in the last year. So really we say sort of 2008 till about 2017. So basically a decade of the Fed buying up treasury debt and all kinds of other debt from off of banks' balance sheets and giving them cash reserves at the Fed in exchange. Now that's we call those reserves plus the currency in circulation. We call that the monetary base. A lot of that money sat and remains sitting, parked just as Fed reserves, and not lent out or used. Well, it can't be lent out, but it's not used to leverage bank lending simply because there's not enough credit-worthy borrowers out there. Banks haven't increased lending as fast as the Fed pumped up their balance sheets. So what it really amounts to is a recapitalization of banks by the Fed and backed by the taxpayers ultimately if things go wrong. So it's very, very difficult to trace a one-to-one connection between bank reserves and rapid or hyperinflation in day-to-day living. Now, I would say we have had hyperinflation in certain equities. I think the FANG stocks are an example of hyperinflation in assets, in a particular asset class, tech stocks. I think we've had some hyperinflation in coastal real estate in places like San Francisco, which is still going up unbelievably 5-10% a year against all odds. So, I mean, this has been identified centuries ago as the Cantillon effect that money created by a bank enters the economy in drips and drabs across time, across geography, across industries, across people, not uniformly. We didn't all get $1 million new dollars in our bank account the next day, and then prices just adjust overnight. It's been a process whereby the closer you are to the Fed and what it's been doing, if you're a primary dealer, for instance, with the Fed, then your bank and the projects around you were more likely to see price increases than a Walmart 3,000 miles away. So it's a complex process. Is that a cop-out answer for Austrians? Yeah, it is in a sense, because what Austrian business cycle theory doesn't do for people is it doesn't explain timing. It doesn't explain when. And Mises himself talked about how it couldn't tell you, that the theory itself couldn't tell you that. And that's what economists, especially not academic economists, but economists working in financial markets, that's what they want. And the people who really study and predict when things are going to turn, people like Nassim Taleb, Mark Spitznagel at University Capital, these guys have skin in the game. They take a huge risk, and both of them made a ton of money in the last crash. most of us don't have the ability or the wherewithal to study things that closely all day, every day, and then have the capital to take the risk. So I think that there's a lot more inflation than advertised. I think it's not uniform across retail prices as opposed to other kinds of assets. And so, the short answer is I'm not 100% sure. And I don't think anyone who tells you they are is being honest.
So I agree with you that assets have been hyperinflated. I definitely agree with you on that. I think it's not just stocks. I think it's bonds, because central bankers care more about their government bond market necessarily than the stock market. And there's also been huge hyperinflation in real estate. We talked about that earlier. But I think the other thing is, since I've gone through and actually, rather than just watching the lectures on the Mises YouTube channel, watching the lectures there and actually gone back and read the books, and I think there's been a misinterpretation of some of the things that Rothbard and von Mises said by some of the modern Austrians. And in my opinion, I think what has happened is that von Mises and Rothbard, they both said that the money first would probably not go, the monetary inflation would probably not go into consumer prices. They actually said it would go into the capital markets first. And so I really haven't heard any modern Austrians say that correctly. So the book said that, and, people are saying the Austrians are wrong. They don't know what they're talking about. Austrians have incorrectly predicted 6 out of the last 5 recessions. But the people who are making, those criticisms, Jeff, they actually haven't read any of the books.
Well, yeah, that's probably true, and that's true of a lot of things. As Austrians and as libertarians, we tend to use the term Keynesian too loosely in describing things that Keynes himself didn't necessarily say or write. So we're all guilty of that. We tend to read a lot in an area that reinforces our views, and for us, that's libertarian literature and Austrian economics. So I think that's a universal confirmation bias problem that's just wired into humans. But again, I'll repeat myself. If we're wrong and they're right, the Krugmans are right, why doesn't every central bank on earth just crank up those printing presses and start buying up not only debt from banks, but heck, start buying equities like the Japanese central bank does. Start buying the FANG stocks. Why stop there? It's sort of the same argument as why not make minimum wage $100? If it's good, why not more of it? And if it's good, why only do it in times of crisis? Why isn't just the standard policy?
And if central banks say there is no inflation now, why don't they just start dumping $1 trillion, $100 billion a month, or $1 trillion a year in their balance sheets? So I don't think we're going to see that. So we have a situation now, Jeff, where the central banks are claiming that they can get out of this pretty easily. Oh, yeah, we're going to reduce our balance sheet. The Federal Reserve has been saying since pretty early in 2017 it was going to reduce their balance sheet, and I don't think their balance sheet has been reduced at all. I think actually it's slightly gone up while they've been raising rates, claiming they're going to reduce their balance sheet, the all talk, but their actions say otherwise. They actually haven't sold anything.
Well, if you go back to the crisis of 2008, the balance sheet was below $1 trillion. It was about $600 billion. It ultimately went up to over $4 trillion. As recently as 2011, Fisher at the Dallas Fed, who's now retired, was saying, hey, we're going to return our balance sheet to pre-crisis levels. So we're not monetizing debt. Yeah, sure. If we didn't sell off all those treasuries, eventually, yes, we would be monetizing debt, but we're not going to do that. Now they've pulled back from that position, and the most recent estimates I've heard from people at the Fed is that, well, we're going to go to maybe a $2.5 trillion balance sheet from $4 trillion. So nobody is any longer saying that we're going to go back to the same size Fed balance sheet as we had in 2007 when things started to get shaky. So they've changed their tune on that. There's another word for that might be they lied, depending on your perspective. But we're not going back. And if the stock markets get a little shaky, I think Powell will renege on his promise to perhaps have 5 interest rate hikes over the next couple of years. I think that the political pressures and the economic, the financial industry pressures would be too strong, and that they would go back on that.
And I still don't think that the Federal Reserve will be able to get down to that $2.5 trillion number. I think maybe they'll get off $100 billion, at most maybe a couple $100 billion, and then things are going to start to turn. I'm not even sure if they have that much time. I mean, things are really beneath the surface, Jeff. Things are really starting to unravel in China. Japan claimed that they were going to reduce their balance sheet, and then the Bank of Japan did, and then the interest rate started to spike there, and they had to do a total 180 and reverse course. Things are getting bad in China. China just nationalized an insurance company that's larger than AIG was during the 2008 financial crisis, and they claim they're only going to have it nationalized for a year. So, I mean, the rules are changing. These central banks for all these large economies are all cheating with the amount of QE and money and credit. They're all changing the rules and pumping things in. So I don't think there's going to be any major reduction in the balance sheets. But if they do, I mean, the asset prices already are starting to show cracks, like you said. So look at the VIX. If we do have a 20% or more stock market correction, I mean, is the Fed going to allow it? During the 2008 financial crisis, and this is just my view based on all my research, I haven't heard a lot of people talk about this, but I think one of the main reasons QE was done was because of U.S. government tax revenues. So if those capital gains taxes for stocks and all the other asset prices, if those things didn't go back up, the U.S. budget was going to have an enormous shortfall. It was going to blow a hole in the U.S. Government's budget for not having those enormous revenues from capital gains taxes on stocks and bonds and real estate if they didn't try to reflate those assets.
Yeah, absolutely. And capital gains tax are a huge source of revenue in states like New York and California. So you would see real problems in their budgets as well. States tend to get used to the boom times and budget out to infinity based on endless growth. So when that doesn't happen, they find themselves having huge shortfalls. They find themselves trying to fund social programs that they can't fund. And of course, unlike FedGov, they can't just print money. So they're in a position where they have to try to sell bond debt. And if you're California, for example, that's not so easy.
Exactly. Or they just tax people. So the pension funds in California, like CalPERS and CalFERS, have huge shortfalls because the pension fund managers can't make 7% returns per year because they're already too big and they're barely making 1%. So they're just proposing that they increase taxes on a bunch of things across the board. So yes, Trump did do some private sector tax cuts at the corporate level and federal level, but the states, he's dumping this infrastructure program. He's claiming to dump a lot of the liabilities onto the states to fund it. So that means then just because your federal income taxes are going down, your state and local taxes are going to be going up if they're funding these pension shortfalls and infrastructure programs.
Yeah,
so this is just how
entirely possible.
Well, I mean, this is just the nature of government, right? So a politician or a bureaucrat says one thing, and then, normally behind the scenes they're doing three other things.
Yeah, it really never ends. There's no free lunch, and I think that's the bottom line. There's no magic formula, taxes, regulations, monetary policy that makes the economy more productive. What makes the economy more productive is leaving people the hell alone and allowing them to accumulate capital in the forms of operating profitably and making a little more than they spend each year, and deploying that capital into better and higher uses. That's the only way. Everything else is some form of smoke and mirrors.
So you don't think then that cutting taxes and cutting government spending and letting wages and prices clear and reducing regulations, I think all those things would be good for the private sector and entrepreneurship and small business if you allowed wages and prices to go much lower when the economy is not doing well. So then, the small businessman or entrepreneur would have the incentive to go and either grow their business or start a new business. But we're seeing some of that, but I don't think we're seeing nearly as much as we would if the taxes were a lot lower and there was less regulation and wages and prices were lower.
Well, libertarians don't control state houses, and they don't have much control over Donald Trump either. So here's where we are.
Okay, so last question before we end the interview. So all the talking heads on TV, you mentioned Paul Krugman, and he's basically like an anti-deflationist. So why won't the economic and political elites like Krugman, talking heads like Krugman, and other people allow real deflation to occur? Wouldn't deflation just clear wages, prices, malinvestment? And isn't deflation the cure for too much debt?
Yeah, isn't it interesting how the one thing that's required to get us back on sound financial footing is the one thing that they fight tooth and nail? Jim Grant has a great saying about deflation. He says deflation is just another word for ordinary people becoming wealthier. Deflation is human progress. It's why a DVD player that cost $300 in 1990 costs $40 now, if you even need a DVD player. That's called ordinary people becoming wealthier. It means prices falling relative to the dollars in your wallet. So it's a crazy mentality that the actual express policy of the U.S. central bank is 2% annual inflation. Well, as we all know, the rule of 72, that doubles pretty quickly. Prices double pretty quickly. So it's just a terrible, terrible tax on savers, and worse yet, it's just a bad way of operating monetary policy for entrepreneurs, because you want a stable currency, and which allows entrepreneurs to make rational calculations in relative prices of goods, is really at the foundation of any decent economy. And when you monkey with the value of the currency through aggressive monetary policy, you're really putting entrepreneurs into a gray zone where their decision making isn't based on reality, and that's what's so frightening about it. So it's deflation is another word for human progress, and I would argue inflation's the opposite. So if anything, in a healthy society, goods and services are getting cheaper, not more expensive.
Amen. And von Mises said that inflation is 100% government created. So there is no, there may be really temporary amounts of higher prices or higher wages or something, but the market would solve these problems very quickly. It's government intervention by politicians and central bankers and bureaucrats that causes real inflation, an increase in the money supply, forced minimum wage laws, wage and price controls, things like that. And, despite all of this ridiculousness we've talked about in the interview that the politicians and the bureaucrats and the central bankers have really gotten away with for a very, very long time, some entrepreneurs in the free market and businesses and small business owners have still managed to figure out ways to offer consumers a higher quality product and service at a lower price, like you mentioned. I mean, the flat screen TV market, you get a really high quality product now for a lot lower of a price than what it used to be 15 or 20 years ago. Same thing for a computer with Moore's Law and other innovations. So there is some examples of free market beneficial deflation for consumers. There's just not enough of them, not as many as I think there would be if there wasn't all this tinkering and intervention and craziness by, people trying to force wages and prices higher and creating massive amounts of artificial money and credit.
Well, the two areas where we see prices rising and quality falling are in education and healthcare. And those are the two areas of the economy that are most controlled and regulated by the state. So, DVD players, electronics exist in a relatively unregulated market. So that's why they're getting better and cheaper. It's just that simple. It's called competition.
Amen. Now, Jeff, if our listeners want to follow more of the Mises Institute's articles or a YouTube channel, or check out more of the work that the great work that the Mises Institute does, and maybe donate, how do they do so?
Well, just come to Mises.org and sign up for our daily newsletter. We'd love to have you visit the site. We've got a lifetime's worth of reading there. You can follow us on Twitter or Facebook if you care to, but really the Mises.org is probably the most highly trafficked economics website in the world, and it has an unbelievable amount of free stuff on there. Lots and lots of entire books in PDF and HTML formats. If you don't necessarily need the physical version. So, we really encourage you to check out Mises.org if you have not.
And the Mises Institute has really changed the way I think about the world by a lot. I'd like to actually see, Jeff, a Mises Institute event here in the Washington, D.C. metro area. I mean, I'm surprised you guys have had it in a lot of nice areas. The D.C. area is pretty nice when it's warm, so you guys should have it here too. And then people can take a tour around, the housing bubble, all the construction cranes and stuff, and see how the government bubble has gone crazy recently.
Yeah, definitely. Northern Virginia is ground zero for political malfeasance.
Oh yes. They're building. Have you seen what they've done out there in Loudoun Town Center and how far they built that out? I mean, that area 10 years ago there was very little out there. Now, there's an enormous amount of luxury condos and luxury single-family homes, and they built enormous shopping centers, all with artificially cheap money and credit.
Well, it's called the Imperial City, and so Got to have imperial housing.
Okay, on that note, I want to thank you again for your time, Jeff. I always enjoy our discussions, and keep up the great work with the Mises Institute. I wish you guys continued success.
Great, thank you.